Ceazor. Today is January 15th, 2026. Today's actually my birthday. I'm almost 50 now, boys and girls. Getting up there. Anyhow, so I have a lot of tweets for you today to go through and give you some of my hot air. But as always, this is not financial advice. This is just my own biased personal opinions on things that are in the news today. So let's get started immediately. So the first thing I have here is my own tweet. I tweeted out a card from ETH Gas. I have a referral link. I will share that referral link with you if you want. And basically I get some beans. You get some beans for the gas that you've spent in the past and clicking a few buttons here or there. But the report, takes a bit of time to generate. And it generated my report, and it has told me that I've spent 12.5 ETH on gas. That's like $41,000 at current prices. Now, bear with you. I've been in here for 5 years or something. So it's spread across those 5 years with the wallets that I connected. I do have other wallets that I did not connect it, so that number is actually larger than what I'm showing you. So that kind of hurts. And I do hope that, these beans, I got something like, 4,700 beans or something like that. And I'm hoping that those beans are worth $40,000 or more. That would be nice. But anyways, let's get right into things and let's see what happens. I'm also keen to know what utility this token will have, if any. I probably should read the docs and do a little bit more research. But right now I'm at the point where it's like, it doesn't hurt. Just click some buttons. Maybe it hurts a little bit because you docs your wallet to your X profile. Some people aren't willing to do that with certain wallets and so forth. So let's move on to the next one. So here we have Shanaka Alasem Pereira. Sorry if I can't get your name right, but anyhow. So this is kind of the news today, and that is the Genius Act, Clarity Act, these stablecoin acts. Okay, so let's read what Genius, this guy says. I don't want to read the whole thing because he's like, there's a lot here. But let's kind of talk a little bit about something it says here, okay? So it says, U.S. Congress just legalized the largest wealth transfer in financial history. Nobody noticed. Section 11 of the Genius Act prohibits stablecoins from paying yield to holders. Tether holds $135 billion in T-bills, treasury bills, right? Earning 4.5%. That's $6 billion annually. Passed to you, $0. Now, Tether has always kind of had this history of actually passing their profit to no one, keeping it for their own treasury, their own company, and building it up. So it's not, people aren't expecting Tether to give them the yield. However, there are other stablecoins that have come up in the past that kind of are yield bearing or passing that money to the token holders or the minters of this token and so forth. So it's pretty interesting. I don't want to, like I said, I don't want to read through all his points because I have a lot to get through today. But I will skip on to Michael from Curve Finance, his take on this. And he's like, I used ChatGPT to do something useful. And basically he took the bill and he stuck it in ChatGPT, and then he got some information about it. Now, this bill is that he actually shares the report, the ChatGPT report link, and I'll make sure to share that with you as well. And you can go and read the ChatGPT distillation of it. It's still pretty long, but basically what he asked it is his question is, does this act require decentralized finance to apply know your own customer rules to all users? And then the answer is simply no. And then you can go through and get a lot more details because he asks a few more questions and stuff like that, and which coins are safe. And he kind of goes through and says there's he asks a lot of questions, but basically what I wanted to kind of show you is where is it? I'm kind of scrolling at the same time. So he's like, is SUSD allowed under the bill? Yes. is SUSDE, is SUSDE going on. I don't want to spend too much time and kind of like hammer you with it. You can read through this, but basically his distillation is that it looks good for curve finance and yield basis, his protocols, but not so much for Coinbase. So I don't know if like Coinbase has been giving like yield to people who hold USDC in their wallet, and maybe that's not going to be allowed anymore. Now Coinbase is a centralized exchange. It's a publicly traded company, founded and owned and operated in America. So it's under different. It's like basically the bank giving everyone who deposits money in their account profits. Now, I don't see why that should be a problem. Like, to me, that sounds like I would consider, I believe Coinbase has a banking license, and why can't they give the interest to the people in that hold US dollars in their account, right? And so forth. I don't know. Like, I don't know exactly what's going on. I'll have to read a little bit deeper, but you can kind of check out his ChatGPT report. And I'm going to talk a little bit about Liquidity as a result of this, because this makes me think about Liquidity. Liquidity is a immutable stablecoin called BOLD, B-O-L-D. And I've done videos on it. If you don't know how it works, you can check them out. I'm pretty sure most of you know how it works. But anyhow, it's immutable. You can't be changed. It offers a protocol enshrined real yield. And now this is the key part I wanted to talk about. Now, BOLD is not an interest-bearing stablecoin. However, the protocol is immutable and gives all its yield to stablecoins holders who deposit the stablecoins into the stability pool. Now you're giving up some of your stablecoins for redemptions, which are like basically buying ETH if it dips, right? If ETH dips and people get like, and the peg of the stablecoin goes below, then you're basically able to buy some ETH, right? You're getting some ETH. So in the stability pool, you're going to get the interest that the protocol offers. So you're not holding an interest-bearing stablecoin. You mint a stablecoin that's pegged, but you put it into a vault. So that's kind of my point here, is that like this might be a way to get around the whole like, stablecoin issuers cannot give profits to stablecoin holders. If that's the case, then you just don't give them the profits in the kind of a rebase or an interest-bearing stablecoin. You just ask them to deposit their stablecoins into some utility gauge or some vault or something like that, and maybe that might be a way to get around it. I would highly suggest you to check out Liquidity, because even if the government says, you can't, these guys shouldn't be giving their yield to the stablecoin holders, there's nothing that can be, it can't be changed. However, they might go after you specifically if you're breaking the law by doing this, right? By participating in this. So you have to know your own laws. However, it's refreshing to know that Liquidity will never change. They cannot change. They cannot pull their liquidity, or they cannot change the contracts because some regulator tells them to do so. Moving on. Here we have Cup of Joseph, which is, he posted a chart. It's pretty interesting. It looks like an arrow. If you're watching the video, you can see it, but it looks kind of like an arrow or a comet. And he's like, guys, these features like these have 99% chance of stealing your girl. It's very cryptic if you don't know what's going on, but basically it's concentrated liquidity on a stablecoin to hold its peg, and the vast majority of the liquidity is around the peg price, and then it kind of tapers off and does this curve, and then has a cliff, and then does another little curve, and then has a cliff to zero. So it's an interesting way to look at the the price curve of concentrated liquidity that is out there with for stable coins. I think it's a cool chart to kind of share and talk a little bit about. Okay. Moving on, we have DeFi Dad. He's a long-term DeFi aficionado. I've followed him for a long time, and I've enjoyed his content through the years. Now he's starting a new pod called the Edge Pod, a podcast, and basically what it says here, the mission of this podcast is quite nice. It's like spotlighting DeFi protocols that actually generate cash flow and return that value to token holders. I think that's pretty fantastic. Instead of the devs or the treasury getting all of the cash flow, if you buy the token, if you farm the token, if you hold that token, you get the yield. That's what DeFi was supposed to be, in my opinion, or that's what the dream of DeFi was for me. And then you see all these protocols that like issue tokens that do nothing. They do a token raise. They wait 5 years to like turn on token like fee switch, and then I like protocols that launch with the utility already there, and like Liquidity, like I just said, is completely immutable, and all that. So yeah. So you could check out this podcast. I like the podcasts, but I'm a little bit wary of podcasts where they take on guests, because they tend to be very long, right? You're looking at like 30, 40, maybe an hour of talking, blah, 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 blah. And getting those points out it's easier for me to just read the docs for the most part. However, you can kind of say that about what I'm doing right now, right? Okay, so moving on. Here we have aerodrome.finance. They're talking about a token called fun. So, $fun. It's for a protocol called football.fun. I don't know anything about football.fun, but no crying in the skill-based sports arena. I assume this is a kind of like betting on football protocol, and they've tokenized, and they've gone through basically the token, the aerodrome ignition system, where they have incentives coming, emissions coming soon. And it says here that the fun token is live and tradable across Base, Solana, and Sexes. So I assume maybe they got onto Coinbase through the ignition program. I'm not sure. You'll have to dig a little bit deeper. But it kind of makes me think about two things. Like, number one, that's fantastic. Like, it's great to be able to have a place where you can launch your token and get the coverage. Now, I'm not sure how Aerodrome has to do with it being on Solana. Probably nothing. Football.fun probably like reached out to someone on Solana and got the token there as well. However, the thing that I wanted to talk about is like this .fun thing. I'm kind of hoping that like this .fun thing can go away. Like, I don't really like the .fun because it has like, it has connotations with pump.fun, and that to me was like the worst thing that kind of happened to crypto, other than like hacks, scams, and like FTX and blowing up, and that like last time where like FTX and Celsius and all these guys blew up, right? That's definitely the worst, right, thing that happened to crypto. But like this whole like .fun thing is kind of also pretty bad, because it shouldn't be like, I guess it is gambling. Maybe that's a good point of it, is like when you go to .fun, you're gambling, right? And you've joined the casino, and that might be a good thing. That might be actually a really good thing. So I'm kind of on the fence about that. But you can check that out. I'm not saying buy this token. I have no idea about this token. I don't like football. I don't watch football. And when I say football, I'm talking about European, like soccer or whatever you want to call it. Like, so I'm not going to participate. I'm not going to play this. I'm not going to buy this token. But you could if you wanted to. So you can check it out, okay? Moving on, Jordy today. Jordy's in my feed, and I like what he says. So he's talking about yield basis, and he says volatility is the lifeblood of yield basis. If the market stays sideways, fee generation naturally cools down, and that's exactly what we've seen in November. So he's right. Volatility, when you're a liquidity provider, what you want is volatility. When you are a concentrated liquidity provider, what you want is volatility in a tight range, as tight as that's what you're trying to predict. When you provide to concentrated liquidity for the sake of earning fees, then you're trying to predict the volatility of that asset, of those two assets, right? So that one asset versus the other asset. And you're trying to predict it and keep your tokens in range. Because the more you have to rebalance, the more you're probably losing money, because you're buying high, selling low if you are rebalancing a lot. So getting that volatility prediction is very important. Now, what he's saying here is that because volatility has gone down a little bit on BTCs, those fees for yield basis have gone down. So he says a few weeks ago, only 45% of the supply was staked, earning governance power. Today, the number has jumped to 85%. So what is he talking about? He's talking about the yield basis token. Before, like, I got a pretty nice, decent paycheck in BTC for staking my YB tokens, and now 85% are staked. So instead of there being 42% of this token supplied and I'm part of that 42%, now there's 85% and I'm part of that 85%, and I haven't increased my stake at all because I haven't gotten more tokens. I haven't bought more tokens. So anyhow, you can read through his post here. However, now ETH is part of the market, yield basis, and other tokens might join as well, or there might be some, maybe some LSTs or who knows, right? We'll see what happens in the future. Moving on. Here we have Sonic Labs. So Sonic has, let me read it out. It says, in early November 2025, Beats Finance experienced an exploit. The Sonic Labs team successfully recovered 5,829,196 S and has now fully distributed the funds proportionally to all affected users. A full breakdown can be seen here, and there is a link to a GitHub post, GitHub repo that explains what has happened. Okay, that's fantastic. This is basically the balancer hack that happened a little while ago that just kind of blew everyone's mind. Like, this protocol's been around forever. This version as well has been around for a long time, and it got drained all of basically a whole bunch of the LPs that were correlated assets. So ETH versus LST ETHs. In this case, it was Sonic tokens versus staked Sonic tokens, and the hacker, was able to take them. So they recovered some of them, and they gave these back to the users, which is fantastic and awesome. So it's a partial recovery. It's not a full recovery, but at least it's something. If you are one of those liquidity providers, I'm sure you're welcoming this recovery of these tokens. Moving on. Here we have Anton Chung. He says, kind of surprised no one has yet to build a decentralized stablecoin using Euler's infrastructure. You've got all of the pieces needed, and you can make a blue chip only like Liquidity. Given how Sky is surrounded by drama and has so many governance issues, I really think it's a good alternative. Pros, 0 extra audit costs, solid liquidation mechanisms, can integrate with Euler Swap and Uniswap v4, can launch it in a week. Cons, less cool because you don't need to write your own smart contract code. And then here's a link to so yeah, he's calling out to people that could use the Euler system to make a stable coin. I'm not sure, I'd have to look a little bit deeper on this, and I'm not sure if this is necessary, like especially since we have quite a few models already for stablecoins. There is, Liquidity, which has its own forkonomics system where you can fork Liquidity and then give them a bit of your governance token. You do your own due diligence on it. There are lots of other stablecoin designs already out there that you could fork if you wanted to do a stablecoin yourself. and instead of trying to jimmy up Euler into a stablecoin. Now, I'm not saying it's impossible or hard or difficult, but if you're going to fork something to make a stablecoin, I'm not sure if you need to use Euler. However, I like the way he's kind of sharing this as a possible route. Like he's not saying it's an idea, and I kind of love that about crypto. Is you if you just pay attention, you can get lots of ideas from lots of people, and everyone shares ideas, and they don't try to hold everything tight close to the chest, and so forth. So I like that. You can do a little more research if this is something you are interested in. Okay, next one, I have a tweet from Katana. Katana is a L2 that is pretty interesting. It was incubated by Polygon, but it's like, I think I've talked about it in the past, but just to refresh people's memory, all of the stablecoin, all of the assets that are bridged to Katana are first put into various yield strategies on mainnet ETH. So for example, the USDC on ETH mainnet is put into Aave to earn interest, and then that USDC is minted on Katana, and then you can put the Katana USDC to work in Vault on Katana, so you get interest and interest. Okay, so you're getting double the interest. It's like you're lending your USDC out like basically twice, right? Which and it's fine. Like there's a little bit more. Obviously, there's more smart contract risk. However, today he's talking about this. Today they are talking about this USDC WETH LP earns from multiple sources 2.5 native fees. So 2.95% native fees, 158% CAT rewards, 2.3 in USDC from the Vault bridge, and that's like what basically the bridge I told you, and 1.47 from the WETH Vault bridge. So there's quite a bit of yield here. I have put some assets into Katana myself, so I'm kind of biased on it. I am farming this CAT token. I am getting some, but I haven't put a significant amount because I'm still a little bit scared because there is a lot of smart contract exposure here. However, it's not super shady exposure. It's pretty I'll call it battle tested, sort of. So I would definitely consider looking at it and considering allocating some to it, but not. I'm not going to tell you what to do with your money. You do you, and you decide what's best. However, I thought I would share it because the yield is pretty significant. Even if you don't do this liquidity pool thing, even if you just put the assets into the vaults, you get a pretty significant amount. And especially if you deposit your Vault Bridge tokens into Yearn on Katana, you're getting significant APR. It's something like 40% or something like that. So check out Katana. I think it's worth a look and worth a consideration. Okay, so here we have another case of somebody getting sandwiched attacked. Now, it does say Uniswap version 3, so maybe this is on mainnet. They are paying with ETH. I can't see, he doesn't share the link to what his snippet, but he says someone swapped $220,000 of USDC and got $5,000 of USDT. Now, what I will say about this is like people have to stop setting their slippage to insane crazy amounts, and they have to check their quote prices. Now, in this case, he probably was quoted a decent price, and then he got sandwiched because his slippage was set significantly high. Now, if you're going to swap, I would highly suggest you use a DEX aggregator and don't set your slippage insanely high. Sometimes people are setting their slippage insanely high because they're trying to sell some shitcoin that has low liquidity and or some sort of tax token, so they set it up quite high. Now I'm not going to do the math on this, but that slippage is pretty high. It's pretty significant. So don't set your slippage high. Use a DEX aggregator and hopefully use something like CowSwap that has MEV protection, and double check your swap output before you click OK. Now, because that's insane. Like you $220,000 and then you get $5,000 as a swap result. That's pretty bad. Now, getting sandwiched in this kind of case is pretty bad. So be careful, okay, guys. I got 3 more. Here we go. People will say, working hard, creating crypto content while also wanting crypto to be taken seriously. This dude has been annoying as AF and is an absolute clown. One of the biggest issues in crypto is that it attracts retards like this. And then he's like, you don't know me. Now, who is he talking about? He's talking about Gabriel Haynes. Gabriel Haynes has done some crazy things in the past. Here yesterday he allowed himself to be lit on fire for clicks and stuff like that. And now I question the benefit of lighting yourself on fire. I haven't seen the fire video quite yet. I plan to watch it after this podcast and see what he says. And yes, Gabriel Haynes is a clown. He is funny and he does do things that are outrageous and kind of something you wouldn't see, BlackRock make. Like BlackRock wouldn't sponsor him to do a video. However, there are a lot of people who want to see the stuff he does. And actually, in my opinion, he's actually a really good guy. I've known him for a long time, and he's one of the first persons who encouraged me to make my content, especially my old sandwich videos. He was one of the ones who told me that it's a good thing, do it, and tried to help me to not so much get support, like because all those sandwich videos, I never got financial support really, but he encouraged me and like said, just take part and do this and retweeted me and when I first started out. And I've talked to him a lot, and his content, although is a clown show, there's always underlying truth to it. He says the things out loud that we are thinking. So I will continue to follow Gabriel Haynes, and I will enjoy his content. And I will look at those underlying messages and think about them. And I don't think we need to have everyone in a suit to make crypto successful. Of course, we need suits in boardrooms selling to big money, but we also need this kind of stuff as well. Gabriel Haynes is not extracting value from his followers. He is, as far as I know. I've never seen him launch a coin, pump it, and dump all over his people. I've never seen this happen. Now, has he done it? I don't know. He might have. However, I've never seen him do it. And the way I know him, I don't think he has done it either. Now, I don't know what the whole deal is with this setting himself on fire. However, he has done so. I'm going to watch the video. You can watch it if you like and decide whether or not you think he's worth it or not, or if you should block him or what have you, okay? Moving on, I got 2 more tweets for you. Here we have Crypto Hunts, Huntz, Crypto Hunts. So let me read what his tweet says, okay? Return to mainnet. This is starting to become a daily occurrence. 2,595,176 transactions yesterday. So that's January 14th on Ethereum mainnet, all-time highs again. This is Gwei, the ticker is ETH. I think that's fantastic. Like if you look at the chart that he shares, it's a pretty big spike, a lot of transactions. And Gwei is like below 1. So it costs you maybe around $5 to do a complex transaction on mainnet, which is maybe not great. People would rather pay less than a penny to go to an L2 and do a complex transaction. However, big money is okay with spending $5 to do a deposit into like a Curve LP or something, and have like their stable coins deposited. So, you know, I'm kind of blown away. Like 2.5 million transactions on Ethereum mainnet in one day. That's quite a bit for mainnet. So I'm quite happy. Like to get some content. The average of this chart that he's sharing is about 1.5 million, and yesterday it crossed 2.5 million. So that's pretty cool. Okay, so you can check that out if you like, and I thought I would share it with you. Moving on, last tweet here, we have Predict Folio. I don't know who this is, but I saw his tweet here and I thought I would share it. 2 weeks ago, we reported an insider who won $400,000 betting on the Maduro losing power. Today, Trump announced that this leaker has been identified and is now in jail. The Polymarket account linked to him also appears to have been deleted. So, yeah, so somebody knew that Trump was going to go into Venezuela and capture Maduro, the president of Venezuela, and he bet, and he won he won 400,000 betting on that. So I don't know how much he bet. Maybe it was like 40,000. Maybe it was 10,000. I don't know. I don't know how much he bet, but he got almost $500,000 with this insider information. I assume because he's arrested him. So I kind of like that. But at the same time, like, you know, there's so much insider trading going on everywhere, and there has always been. So it's like, are you going to arrest everyone? No, you're not. However, there's a little bit of other things in here. Like if these kind of, you know, official insiders, like in this case, he knows about an act of war. Or maybe it's not an act of war per se, especially if you ask Uma, but he knows about a military action that's going to happen, and he bets on it that it's going to happen. And then now if Maduro was following him, if the spies or the intelligence agencies around the world are following this guy and his actions, then they would know that what Trump had planned to do, and there could be some sort of defensive mechanism put into place. So, of course, it's dangerous for military actions. Maybe for like, is the stock going to declare a positive earnings? Maybe that's not quite as dangerous. Are they going to do military action in a foreign country that they're kind of, it's not apples and apples, but it's definitely fruit and fruit. So I'm on the fence here. I don't know, but it is his call. And the last thing I do want to mention is it's pretty great to see Donald Trump on video talking, and he has a big giant jug of milk on his desk. I love it. Okay, so that's it for today. I hope this is interesting and useful and enjoyable. Thank you for listening, and goodbye.